I'm back. I'm Ashley Pickens, also known as your auction mama, here in Memphis, Tennessee, you guys. We've got some good articles that have just come out. So first of all, you guys, I've been in real estate since 2006 as a real estate agent. I've also been a real estate broker, but y'all know me as your auction mama, right? I auction off foreclosures at the courthouse for the banks. But today, we are talking about homeowners behind on their mortgage and renters behind on rental payments. Y'all have been talking about this for like the last couple of years, honestly. So this article just came out, which I'm a little surprised because I feel like we've been trying to keep these staggering numbers kind of hush-hush. Well, I mean, it hasn't broken to the news yet, to the mainstream, but I found this article. Y'all get this. Newsweek just put out an article. Over 6 million Americans are late on mortgage payments. And if you know me, I'm going to say multiply by 2. But over 6 million. Let's get into this article, you guys. I will link it down below if you want to read it and see for yourself. Over 6 million Americans are late on their mortgage payments. Housing remains a difficult financial cost for many homeowners across the country because houses are just too high right now. Houses are just too expensive for the average person. Honestly, I think they said the median home price is like $400,000. They said you have to have like an income of like $115,000 to be able to afford like the average house right now. Anyway, let's keep going before I get off. More than 6.6 million households have fallen behind on their mortgage payments. A study from Deeds.com found. I gotta go to Deeds.com. In addition, 9.4 million renters are struggling to make their monthly payments. Now, you know I follow HUD's report every single month. When they report homeowners and renters behind, that report just came out, so I will do another video tomorrow, so be on the lookout for that. 9.4 million renters are struggling to make their monthly payments. HUD has been reporting that it's like 6 million. I told you, you got to multiply by 2. HUD's latest report said that it is 6 million renters behind, and I think it's like 4.9 million homeowners behind. This report says 6 million homeowners and 9 million. I mean, who do you believe? Because the numbers are so all over the place, right? We just making up numbers at this point. Y'all, but I know they're high. I bet it's over 10 million on both sides. I bet it's 10 million homeowners are behind and at least 10 million renters are behind. I bet at least both sides, not just both homeowners and renters. Let me finish reading this article, right? It says, buying a home remains out of reach for millions of Americans because of inflated home prices and rising interest rates, right? Because I think we're sitting at 7 right now. Last month, borrowing costs on a 30-year home loan surged to 6.85%, according to Freddie Mac, right? So they break down the states with the most renters and homeowners behind, okay? So let's break down some states. Mississippi came in with the highest number of those with late payments. A whopping 15% of Mississippi households are behind on their mortgage. For renters, that percent was 21%. Next, Illinois. Illinois also had a high percentage of those with late housing payments, 13.9% of all households. But this was most concentrated among renters, with 24% of Illinois' renters being delinquent on their rental payments. Roughly 14% of all Delaware households, renters and owners, were behind on their housing payments, while Wyoming had around 12% of all residents facing delinquency. Y'all, I'm reading this article like it's the first time I'm reading it. I'm surprising myself again as I go through this. Renters generally struggle more than homeowners to make their payments, especially in places like Texas and New Jersey. Nearly 19% of renters were late on payments in Texas. Here's Texas. Compared with just 4.5% of homeowners. So Texas, 4.5% of homeowners are behind, 19% of renters are behind. What is going on? What are these landlords, investors, y'all check in? Are y'all getting any rent payments? Y'all, it sounds like a disaster. Like, it sounds like the perfect ingredients for a storm, right? Renters not paying, homeowners not paying, jobs not paying, and laying off. You know what I mean? Just, y'all, I don't know. New Jersey had a similar situation where only 5% of homeowners were missing payments, but nearly 18% of renters couldn't pay on time. Y'all, I told y'all, people, you're not just robbing Peter to pay Paul. You robbing Matthew, Mark, Luke, John, Peter, all of them to pay Paul. Paul not getting paid. This really shows how tough things are for a lot of people right now. Even though jobs are out there, wages haven't kept up with how expensive everything, especially housing, has gotten. And are there really jobs out there for people to get? Right? You keep hearing about people applying and going through interview processes, and then they don't even get the job, right? Or people are getting laid off. I keep seeing that people are getting laid off. There's a good site, I don't know if y'all are familiar with it, Warren Tracker. I'll put it on the screen so you can see it. Warren, WARN Tracker, and you can see companies that are announcing their layoffs. If you're working for a company, check it out. Make sure your company's not on there, you guys. Also, insurance, homeowners insurance, and taxes. Everything is just high right now. And if you bought in the last couple of years, right at the peak of the market, you guys, there's other things that come with buying a house than just the house payment, right? I think people forget that sometimes. You're buying a house, but when you move from, let's say, a 500 square foot apartment to a 1,500 square foot house, maybe your light bill is about to be high. Your light bill is going up. You need to estimate that. When you go from living again in an apartment building to a house with a front yard and a backyard, somebody's got to cut the grass. That's an expense. And when you own a house and something breaks down, you are the property management. You know what I mean? You're not calling anybody, right? And I think the other thing that people do when they buy a house is you forget you got to furnish a house, right? So you buy a house and then you spend all this going to debt trying to furnish a house. It's like that lifestyle creep, and you forget everything that comes with buying a house. Y'all, when I bought my house, my living room was echoing for a long time because I refused. I was like, I'm going to pay cash for everything that I buy. People will be like, can I come over? You better bring you a chair. Or you going to sit in a folding chair, because I haven't got furniture in the living room yet. Because unless I'm paying cash for it, I'm not buying it. So my house echoed for a long time, you guys. And I encourage you to let your house echo if you don't have the money. You know what I mean? I didn't care about what anybody said. You're going to sit in this folding chair and we're going to be all right if you want to come over to this house. As for me and my house, we sitting in folding chairs, right? This article also says many homeowners bundle their mortgage and insurance payments, which are handled through their lender each year. As insurance costs rise, the amount held in escrow to cover these payments also increases, right? Putting additional financial strain on homeowners, because y'all bought a house thinking your payment is going to be one thing, that principal and interest, because you get a fixed rate for 30 years. The only thing fixed is your principal and your interest, right? Those taxes and insurance can go up. And those taxes and insurance are going up, especially, somebody commented on the last video, if you buy a new build. People forget that. When you buy a new construction home, that tax amount that they're showing you at closing is not your tax amount. They taxing that land. They haven't taxed the property on that land yet. So that first year of mortgage payments is not the truth, right? You're gonna be in for a rude awakening. And a lot of people are seeing that just bought a new house and their mortgage payment has doubled because their taxes went up, because now they're counting that property on top of the land. And here's another article I found, you guys. I'll put it down below so you can read it. The title: A jump in delinquencies in a corner of the mortgage market suggests first-time homebuyers may be struggling. It's not maybe, they're struggling. They're struggling. Mortgage delinquencies are rising for loans popular with first-time homebuyers. Those FHA, you only got to put down 3%. You know, they might give you down payment assistance so you don't have to bring that much to the table. You guys always ask me, how do I feel about 100% financing? And I always answer this question, and I say, and a lot of you might disagree with me, but I don't think that you should buy a house and you don't have any money in the bank, right? Like, we got to give you down payment assistance to get the house, right? I got to give you get gift funds from your family members for the closing cost, right? You know what I mean? You waiving everything. I got to wait for you to get paid to do a home inspection. We're going to waive the appraisal. You hadn't come out of pocket with no money because you don't have any money, right? That's not how you go into buying a house, right? The people who put down the least amount are going to be the first ones upside down. You don't have any equity in your house, right? So let's keep reading. That's just how I feel about it. But I know programs are needed. I know, you know, it's not for everybody. But if you got a super low credit score, you don't have any money in the bank, like you barely qualified for this house, those are a lot of times the first time. Those are the people who go into foreclosure quick. You know what I mean? So compared to 1 year ago, the seriously delinquent rate rose 70 basis points for FHA loans. So FHA and VA loans are the loans that are in trouble right now. Now, don't get me wrong. I think it's horrible for any veteran to be homeless, right? Horrible. I don't even think that should happen in our country, right? But it does. Let's see. According to the fourth quarter data from Mortgage Bankers Association, the rising delinquency rate on FHA loans steeply outpaced late payments on more conventional mortgages. Y'all know conventional, you got to put down more, credit score has to be higher, all that. The same trend was seen in loans offered by the Department of VA. Y'all know veterans were under a moratorium. You could not foreclose on a veteran. Well, not a veteran. You could not foreclose on a VA loan for most of 2024. That has been lifted as far as I know. Even though I think it's sad that our veterans are in foreclosure or, you know, stuff like that. I think that's sad, actually. I don't think that should happen, honestly. So, compared to 1 year ago, the seriously delinquent rate rose 70 basis points for FHA loans and 57 basis points for VA. So, you guys, I mean, so what's going on? I know inflation, baby, eggs, as much as eggs cost, and we're not going to talk about them. Makes you want to go buy a chicken, doesn't it? And have your own eggs. Inflation is eating up savings. Mortgage rates have more than doubled since 2021. Property taxes, insurance, and we know consumer debt, credit cards, student loans, everything, you guys. So, fewer first-time home buyers are entering the market. Also, the National Association of Realtors says first-time buyers made up only 24% of sales last year. That's the lowest in history because they can't afford it. They cannot afford a house, right? Especially coming out of college, getting a job. And you know, when you first get a job, you don't come in at the top, right? You can't afford a house. So it's just, a lot of times, it's just more affordable to rent, honestly. So what do you think, you guys? I'm not surprised. And you know, I've been following these numbers forever. So with layoffs increasing in certain industries, do you think this will affect more home buyers like in the next 6 to 12 months? Do y'all think interest rates are going to go up? Going to go down? I don't know, you guys. If you look on Daily Job Cuts, dailyjobcuts.com, shout out to them. They put, like, every time you look, it's like Amazon is laying off. Meta is laying off. This company is laying off 70,000 people. And then we got the federal workers, you know, having to choose between working remote or resigning. I don't know. Ain't nobody safe. Nobody is safe. You know what I mean? So if foreclosures rise, do you think investors will step in and buy these properties, or will banks hold on to them? They probably just gonna sell the notes to hedge funds like they've already been doing. But that's a whole nother story for a whole nother video, right? So we'll see. Do y'all think the market's gonna make a correction? I mean, the way things are going, baby, 2025. It's giving 2020 vibes, isn't it? But we'll see, you guys. That's all I have. Shout out to everybody who came to the masterclass this past Saturday. If you did not get to come to my foreclosure masterclass, don't worry. It's on YouTube. It's right under the videos. It's probably right under this video, as a matter of fact. So go back, watch the replay for free. Let me know what you think, you guys. My mentorship starts February 19th. If you want to get in that, all about marketing and helping homeowners in distress and in foreclosure, jump into that if you're interested. It's a 6 weeks mentorship. I had about 20 something people in the last one. So if you want to get in this one, it starts February 19th. The link is down below. We meet every single Wednesday.